The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, let's take a look at what is happening in the markets. There's no doubt a lot swirling around the grain markets in particular right now between the elections, South American weather. We've had a good rally, maybe some farmers selling, taking advantage of the recent rally in row crops. So let's dive in and get some perspective. Joining us today, Craig Turner with StoneX. Craig, welcome back to the show. How are you, sir?
I'm doing great. Thanks for having me back. Excited to be on.
Yeah, we got plenty to look at here. And I guess, I'm going to open it up this way. Looking at corn and soybeans specifically, Craig, we've had a decent rally. I know, for instance, Nove Beans got above the 10 handle Thursday, then kind of settling back below it or right near it to some degree. I mean, corn has got above some key moving averages. It just feels like that we've had robust exports and we've had, good demand. Maybe some farmers selling, really kind of creeping in here a little bit. I guess, what's your assessment of just what we've been seeing in this grain and oilseed trade right now?
Okay, yeah. So I'll take soybeans first on that one. Listen, we getting some good exports. That's been welcome news. You got that rally above 10. We had some selling here in the desk, so I wasn't surprised to hear, see some farmers selling here. Also, November option expiration is tomorrow. That $10 strike's a big one. The market has a way of kind of gravitating towards it right around expiration. And $10 November soybeans, like November soybeans, is going to be probably the largest option out there of all the months, and $10 is certainly a big strike. So there's part of that too. Listen, there's also a ton of uncertainty in the soybean market between the election, what policies can come from it. I don't think anyone wants to get a huge position either way on the spec side. And nothing like we saw, a month ago, 6 months ago or a year ago. Mm-hmm. And for producers too, I mean, I'm sure they saw this rally, and there's a lot of selling of beans, and you get this rally, and you're going to be selling it. So I get all that. And honestly, over the next 2 weeks, it's really hard to stick your neck out over there, on the market and what's going on. So I wouldn't be surprised if we saw some reduction of risk or we get close to that $10 market. I wouldn't even be surprised if open interest came down a little bit. Corn's a little bit different though. Like corn, we're probably going to be in a 4 to 525, market given kind of normal weather and adequate supply and demand. And here we are around we're in the low fours, 420 on a 2 billion carryout. A 2 billion carryout 5-6 years ago, harvest lows are solidly 330, right? 340, 335, something like that. And here we are, and we can barely stay below $4. So the 20% inflation that we're seeing is real. That old 350 to 420 trading range we experienced, basically from 2007 until COVID in 2020. Now with 20% inflation, is probably a 4 to 525 market. And we're seeing when you see these exports and you see some signs of life, and I do think some of the selling pressure is coming off on corn here. I mean, people who had to sell corn have sold it. We're going to probably see the rest of either get stored on farm or wherever they can't store. If they can't do commercial, they'll start seeing more of the corn piles out there. But whatever it may be, you've got a rosier picture for corn going forward. Major exporters are tight, or are going to be tight by the end of the year, for corn and for wheat. We don't talk too much about wheat lately because we're in the thick of corn and soybean harvest. So that's understandable, but wheat's going to be tight too. So I'm not surprised we're seeing that buying. And if I were a buyer, like an international buyer of corn and soybeans and wheat, and I'm seeing the values now, and I'm adjusting for inflation, and I know this election is coming up, and it's just a wild card of what's going to happen, I'd be buying too. So I think the big question out there is, does the buying continue? I think there was a kind of a buy the rumor, sell the fact in beans. And I wouldn't be surprised if corn and wheat are stronger. So we'll see. It comes down to exports. We'll see what happens here.
Absolutely. Well, and I know coming up the day after the election, you have a webinar. Folks can learn more, sign up, grainsandoilseeds.com. But I think tying the election with South American weather and exports, I think to your point about uncertainty, a lot of this can go together because depending on who wins the presidential election, It's obviously going to affect trade policy, farm policy, etc. You look at South American weather right now, that's an underlying story here that, soybeans have been late getting in. Could that affect safrinha corn in early 25? And then what could that mean for exports if, say, there's a short crop somewhere, whatever the case is? China or other countries might be forced to go to the US to get product. So, I mean, talk about this because in my mind, all of this kind of weaves together, Craig.
I agree 100%, right? So we're going to see, we started off South America kind of dry. It got a little bit better, but we are planting later. And also, in South America's just as big as an area as the United States. Like, they may get rain in some places, but there are plenty that don't, right? So it's always hard to tell exactly how well things are going down there. But you're absolutely right. We have a long way to go in the soybean market. If it's only October here, it's gonna take 3 or 4 months to grow that crop, right? We have potential for weather rallies, and also too, $10 soybeans of today would be the equivalent of 860 back in 2018, 2019. And if you're a believer that there's 20% inflation throughout the economy, which I think there has been, the new trading range, for soybeans is probably $10 to $12 or 10 to 12.50. And the old trading range used to be sub 9 on big crops around harvest, and we would challenge 11 if we thought we could get below, let's say, a 400 or a 350 million carryout. And we would go 12, 13 as soon as you start seeing the 300 and low, right? I think that shifted, right? And that's why, listen, again, 5 years ago, if we were at a 550 carryout with this huge South American crop coming and maybe a potential resumption of the trade war, I mean, we'd be sub 9, no problem, right? I mean, all day long, and here we are, $10. So when I think about South American weather rallies, and then two, what if we're lower on production next year here in the United States? Which you don't even have to be lower in production. We just need the threat of it, the threat of lower acres, or the threat of weather issues, heading into the spring and the summer. All of a sudden, there's weather premium built into there. And the big one, though, and this is especially for corn and for wheat, the major global exporters are basically projected to sell out by the end of the marketing year. So, whether it be, winter wheat, for the most part, but spring wheat's kind of tight too, but definitely corn. Ukraine has never been able to fully rebound on their production in the Black Sea since this Black Sea war started. The USDA has South America and Ukraine, Brazil, Argentina, and Ukraine selling out of corn by the end of the year. So if there is a pickup in demand or there's a production issue, there's only going to be one game left in town. So it's one of those years where it's a show me market where you got to see the exports come up. But when you take a look at the risk reward of like, okay, well, we're at a 2 billion carry out, we can barely break below $4. And here's soybeans, and we got all these bearish cards that have come out of the deck lately, and we can barely get below 10. The risk is to the upside, right? And whether we're using courage calls to eventually sell into, if we got, some of us are forced to make sales now, looking at reownership. And, I think it makes a lot of sense this time of year. When you take a look at the seasonals, and you take a look at, how tight, especially on the grain side, we have potential to get here at the end of the year. Soybeans will be tough, but soybeans are tough. That's a tough one, but, we'll see.
Yeah. Well, and to that point, I was just going to say that it feels like with all this uncertainty, volatility, different things happening, now more than ever, it's important to hedge the risk, manage your risk, whatever the case is, but just be on your toes and be vigilant, right, Craig?
Yeah, absolutely. And every year is different, right? It's about hedging location. Like, are we on the lower end of prices, the higher end of prices? Is there more risk to the upside or downside? What time of year are we in? Right now, we're in traditionally a lower kind of priced year. So because we're in October and seasonally we tend to make lows because of harvest, and we're relatively low when for prices when you adjust for inflation, and the fact that there's a lot of weather and we can have some major exporter tight stocks. I mean, honestly, it's probably, we should be looking at courage calls because here's the thing, if we get the big rally, right, which eventually you get some kind of rally because of weather issues or some kind of scare, no one ever knows how long it lasts or if it's real, right? And in a year like this year, you probably want to have those courage calls so you can sell into them, right? Because when let's say beans do go to $11 or $12. Well, in the moment, who knows if we're going to 14 or going right back down to 10, right? So it's a lot easier. Same thing with corn. Like, I can make some very good cases how if we have 88 or 89 million acres corn, or the market just even thinks we're at a 178 yield, we could rally to $5. But then it's like, well, then what? It's May, it's June, we're here at 5. Do we go back down to 4.25? We go into 6, right? Meanwhile, a $5 call in July or December, volatility is low, in the corn market right now. So you kind of got to take what the market gives you, right? And right now, what the market is giving us is some pretty low, low volatility corn options now, that you can use to sell into. And I mean, it makes selling decisions a lot easier when you get the rally, right? Now, was that what we were talking about 2 or 3 years ago when we're $8 corn? No, like that, it isn't. But you got to use the current environment and where you think stocks, could go, right? And right now, I've been bearish for the past couple of years, but like for now, we're neutral to bullish. I mean, it doesn't take a whole lot in wheat and corn to get things going. Wish I could say it's the same thing again about beans, but it's going to take more. It takes more to come off on the balance sheet. Like, we need the United States here for soybeans to really get going. If there's no South American weather issue or pickup in demand, we're going to have to be 83 million acres or lower. Now, when we're below cost of production, we have been in 82, 83, 84 range, and we also need yields to come down. But if we're 85 million acres and a 52 or 53 yield again, your best prices are going to be these these weather scare rallies that you get throughout the year. And that's just the way it is for this marketing year.
Craig, good thoughts as always. Yep. Anything final you would want to share or reiterate to producers listening in today?
Yeah, well, listen, we're going to have that webinar. Go to grainsandoilseeds.com. It's going to be the day after the election. So we'll talk about our South American weather strategies and how to market, using those kind of advantages. But, pretty much going to do in real time here. We'll see who wins this election. And, both candidates have different views on foreign trade, right? And it's going to make an impact.
Absolutely. Go to grainsandoilseeds.com for more information. And again, it's the day after the election. Hopefully we have an answer on who wins the election the day after. That might be a little questionable considering the way this election has been going and shaping up. But nonetheless, looking forward to that webinar, grainsandoilseeds.com. Craig Turner with StoneX. Always awesome to have you on Market Talk with us. Thanks for being here. We'll talk to you again soon.
Thanks for having me. Good luck, everybody.
Make sure to subscribe to the Market Talk YouTube channel. There, you can watch our latest interviews with the top market analysts in the country, find bonus content, and much more. Just go to youtube.com/markettalkag and hit the subscribe button, or you can search for Market Talk Ag on YouTube.